What is up, PharMore Money family? Another video today. We're going to be talking about Teladoc Health, TDOC, TDOC, ticker symbol, and why I believe it is set to run over the next 3 months to a year, guys. Stock price took quite a shellacking after earnings. It's down $158, but this is a stock that has a ton of potential, a ton of promise to run and run fast as it moves forward. So let's dive into kind of what happened with earnings and then where the outlook is pointing at for its future. So Teladoc Health, guys, let's dive in. So Teladoc Q1 numbers, right? So Teladoc has witnessed excellent top-line growth over the past year. It's mostly driven by its access fee revenues and visit fee revenues, but its losses, guys, have not gone down, which is also one of the reasons for a ton of disappointment for a lot of shareholders, myself included, at earnings this past week. The company reported revenue of $454 million for the first quarter of 2021, which was a staggering 151% improvement as compared to the $180 million reported in the corresponding quarter of the previous year. So prior year, $181 million, $180 million. This year, $454 million, which is just absolutely massive, guys. Apart from the Livongo acquisition, revenues were also driven by strong enrollments in chronic care programs, which is going to be a big factor, guys, as we move forward as a country or even as a world. We're going to see more of a telehealth solution that is needed, especially if one thing COVID has pointed to is that companies like Teladoc Health, which are all telehealth companies based platform, it is more essential than we thought it was, right? So we need these companies more than ever. Teladoc managed to beat the analyst consensus estimate of $450 million. So they did great from that standpoint. The company's revenues translated into great gross margin as well of about 67% and an operating margin of negative 17%, which was lower than that in the same quarter of 2020. Teladoc overall reported a net loss of $199 million and an adjusted loss per share of $1.31, which was below the average Wall Street expectation of a loss per share of 54 cents. So this is the key, guys. They were expected to only lose 54 cents per share. They lost $1.31. Analysts didn't like it. The mass sell-off happened right after the earnings came out. So the company burned $18 million during the quarter in the form of operating cash losses, and this cash loss was again higher than that in the corresponding quarter of 2020. So obviously, I mean, just a couple items not to like are obviously, the amount of losses that they had in terms of operation costs, and then also the fact that the operating margin, is just not there right now. But overall, this is going to turn, guys, and it will see profit as we see more of a dependence on telehealth as we move forward as a country, as a world. You're going to see bigger applications and implications out of a company like Teladoc Health as it merges with more companies and buys up more tele-based medicine items. So from that standpoint, obviously earnings were a little disappointing in terms of the Q1 numbers, but there's still a lot to like about Teladoc Health overall. So why am I so bullish on Teladoc, right? So Teladoc, obviously, if many of you don't remember or don't recall, went through a merger with Livongo Health, and that occurred in October of 2020. Teladoc went ahead and acquired digital diabetes service provider Livongo for a massive amount in around $18.5 billion with a vision to create an all-inclusive virtual healthcare model. Now, part of this Q1 earnings that they released, some of the money was, impacted by this acquisition that was around $18.5 billion. So keep that in mind. The acquisition, though, allows for Teladoc's cross-selling opportunities given the lack of patient overlap with Livongo. So thereby, it's basically offsetting pressures from emerging competitors like Amazon Care and Cigna's acquisition of MD Life. So this Teladoc-Livongo merger that occurred in October of 2020 will have massive implications, especially from a chronic care program standpoint, diabetes specifically, in the long run, guys. It is worth highlighting that the company's access fee revenue for the first quarter increased 183% year over year to $388 million, and it's primarily due to the acquisition of Livongo and InTouch Health, both generating the majority of their revenue from a subscription access fee. Moreover, management stated that 48 cents of sequential increase in per member per month Roughly half was driven by the contribution of an extra month of Livongo revenue in the first quarter. Notably, membership in the Livongo Chronic Care suite of products grew 66% over the prior year, with Teladoc adding 62,000 new chronic care members in the quarter. The company has partially integrated Livongo into the Teladoc app, which I've seen live, enabling users to register for Livongo's care management programs for diabetes and hypertension. To sum up, basically, the whole chronic care management offerings from Livongo comes as a valuable addition to Teladoc's portfolio after its success in mental health services already through the BetterHelp acquisition. Guys, this is going to be a massive player as it moves forward. Teladoc is not going anywhere. Granted, the earnings, the loss per share was a little higher than what was projected by Wall Street analysts. I'm telling you, at $158, $153, this thing is a steal for a stock that can easily 2x your money. So let's pay attention to this. Telehealth is not going anywhere. It is here to stay, and we all have to learn to embrace it. And what a better way than to get behind a company like Teladoc Health. PharMore Money family, let's look at a few more Teladoc key drivers that will propel the stock in the long term, right? So the company's been expanding its offerings for existing clients, as well as adding new clients at a rapid rate. Most recently, guys, Teladoc signed an agreement to expand its relationship with Blue Cross Blue Shield plan on the East Coast with a view to offering comprehensive whole person virtual care solutions to its members. Great and unique, right? The company also plans to provide access to its members to the extensive suite of products, including virtual care solutions and a full suite of digital chronic care solutions across diabetes, hypertension, diabetes prevention, and mental health. In addition, Teladoc's Primary 360 offering continues to gain significant traction from all different health plans around the United States, employer groups, and also hospitals and health systems, also delivering encouraging results. Guys, this is the key piece. Internationally, the company has partnered with Generali Hong Kong, a leading insurance carrier, to offer virtual care solutions to its members across all of Asia. In Australia, Teladoc announced its collaboration with MetLife to offer access to a customized platform across its comprehensive virtual care service to MetLife members in the region. Guys, overall, there appear to be a great number of awesome opportunities that could drive revenue growth in the long term and lessen operating costs, along with driving the earnings per share through the roof as we move forward. So tons to like here, guys, overall. So if you weren't convinced about getting into Teladoc Health before, how's this for you? Cathie Wood started buying shares, taking advantage of the dip in the price the moment after earnings occurred and, the stock price started dropping. Guys, her firm bought up more than 716,000 shares worth over $122 million at the time of purchase. Guys, Teladoc is ARK's number 2 holding, making up over 6% of the fund's portfolio. So if you're not convinced by this video and you're like, hey, listen, I'm on the fence, guys, Cathie Wood does not miss. She is a legend. She is she's like the original. She's the OG of buying these stocks at an incredible price and then turning profits. So I'm watching what she does, and this is incredible that she's looking at Teladoc Health and buying up 716,000 shares. Awesome stuff. Another analyst who is a long celebrated analyst out there that works for BTIG, it notes that he believes also that the long-term outlook for the company remains positive, and his name is David Larson. This is what he had to say. He basically said that the issue that may weigh on Teladoc as a stock is 2021 membership guidance of 52 to 54 million is only a 2% increase year over year, or was basically flat. Despite this headwind, we still like the company and the stock. Management highlighted that the pipeline for membership is now up more than 50% year over year, which is higher than what was reported in quarter 4 of 2020 to close the fiscal year. And many of these deals are progressing. Teladoc has also won a large Blue Cross Blue Shield plan in the Northeast due to the whole person model, and it's a competitive takeaway. We believe that management's comments around membership pipeline are very calculated, and we would expect 2022 membership growth to be far better than 2021's growth rate. So basically, guys, in line with David Larson's comments, he rated Teladoc as a buy, and he's put a price target, get this, of $300. Basically, it's an implied movement upwards of 83% for the year ahead. So incredible stuff from, David Larson and his team at BTIG for their analysis, but also the fact that Cathie Wood is this vested behind Teladoc Health tells me that there's something here that we just need to get behind. For example, for those of you that don't know where Mercado Libre is, it's also another company, a telehealth company that's based out of South America, and their share price is over $1,000, guys. So take a look at it. It's called Mercado Libre, MERCADOLIBRE. Very similar model to Teladoc Health. I would advise you to take a look at them as well. But from my standpoint, I am buying up more Teladoc as we speak so that I can develop and build a better position for when the run-up comes in the next 3 months and beyond. So hope you all enjoyed the video. Thanks so much. If you've enjoyed this video, if you did, please go ahead and hit the like button and please do subscribe. Turn on your notifications as videos are going to continue to pour in as we move forward through 2021. This is going to be the road and journey to wealth and to just massive portfolio returns as we move forward. Thanks, everyone.